Thank you, Peter, for being with us.
Thank you.
So first of all, why are we seeing all these rallying stocks with all the problems going on in Japan, Libya, and especially Europe?
Well, what I think is the market still has a lot of strength to it, underlying strength that it's following through on the rally that we had 3 weeks ago. And I think that, even though there's been some, isolated events globally that do impact the market somewhat, I don't think that's going to actually stop the market from going higher. I still think that, it's about earnings, it's about corporate profits, it's about, potential for the coming year, U.S. and, worldwide. So I do think that some of these things are they can put a damper on it, but I think the market has a lot more strength behind it than just having these events affected critically. So I think we're in good shape.
So would you say, because it seems like after all these sovereign debt crisis for so long going on in Europe, seems that investors doesn't care anymore about what's going on there?
Well, you care if you have, if you've bought some of the bonds from Portugal and from Spain and Greece, but, long-term and macro picture, no, I don't think that they really care that much. I think that, I think investors think that, Europe is going to take care of its own. Germany is still extremely strong, and, they're going to wield some influence over Portugal and Greece, which they already have in Greece, and they're probably going to in Portugal. And I think that worldwide and systemically, I don't think it's that big a deal for the economy, the U.S. economy and the worldwide economy.
And do you see any more contagion? Because it seems like Greece, Ireland, Portugal, the big one, it's Spain. People are really sure that it's not going to happen, but could happen.
Oh yeah, absolutely. I mean, you know what? We don't know what the finances. I mean, you see what the finances are. You can go online and look at this stuff, but who knows? How the depth of a lot of their debt problems are. I don't know that. I'm not privy to that information. I think it's possible, but I think as economies in these countries, Europe is starting to expand a little bit. The U.S. is definitely, and obviously the Far East. As these economies are growing again, there's ability to absorb a lot of the bad news, and that's what we're seeing, the ability to absorb bad news, which is actually a good sign for the economy and a good sign for the market.
And you talk about earnings. What are we going to see next this season? That it's like in a couple of weeks, we are ending March, and what we're going to expect for the first quarter of 2011?
Well, I think what you're going to see is a continued rise in earnings, and I think what we're probably going to see is bigger cash positions in these companies, which, again, is another positive for the market, because these companies cannot sit on this much cash without doing something positive, either hiring new employees and expanding, either buying back shares. I mean, there's really not much they can do with that money. They can't hold on to it that long. So I do think that that's what we're going to see in the earnings season. I don't know if the earnings are going to surprise all that much, but I think it's the cash positions that are behind these companies right now is what's going to really propel the market higher.
And those cash positions are going to help some of these companies to go ahead and buy other companies?
Yes, I think that also a big possibility. I think you might see a lot of that this summer, because now you're sitting on, some companies are sitting on a tremendous cash position that 30 or 40% of the book value of their company is in cash. You know what? They can use that and spend that money wisely and buy a competitor and increase their market share simply, and it's very efficient, and I think that's a very big possibility. We've already seen some of it happening, but I think you're going to see a lot more of it in the summer and the fall. I think that's going to be a huge thing for the rest of the year going forward.
And which sectors do you think that are going to be more into seeing a lot of merger acquisition stuff?
I would think consumers, you're going to see some of the cyclicals get taken over, because I think they have a tremendous cash flow, and good economy, bad economy, consumer stocks are usually cash generators. So I think you're going to see some consolidation in that business. And maybe we'll still see it in the telecom industry. There's not a whole lot left but I do think that Sprint, probably a lot of people are starting to think that may not be around at the end of the year. I mean, it's possible, but I think that, I don't know how, I would give that a 50-50 chance.
And just a last question, yes. What's your take on gold and oil right now?
Well, I've said this before, and I think that I'm probably a little optimistic, but I think that about 10 or 12% of the run-up in these, both of them, have been speculative. And I think that, there is a point when that speculative bubble bursts, or at least contracts a little, and those commodities will come back to a more realistic level. So there's probably a little more room on the upside, but I think the risk is more towards the downside. So I do think that they will be coming in, and I think you're going to get to a more realistic pricing of gold and oil within the next 6 months.
So thank you very much, Peter, for your time.